Awesome. And then everybody, thank you for getting on my weekly COVID call talk, and I'm glad each one of you guys are on it tonight. Tonight, first of all, I want to go with we're going to talk about what's happening in the apartments and multifamily sector right now. In this call, I want to knock out a few things before we really get started. First thing I want to do is make sure I hit that, is just announce a couple of our sponsors. One is the Urban Financial Services Coalition. They're one of our sponsors. The second is Matthews Financial Insurance Solutions. If you're looking for an advisor to help you during these times, Matthews Financial Insurance Solutions is there tonight, there for you, I should say, during these downturns. Tonight's special guest, and this is going to be recorded. You guys are going to be able to ask questions. Is Steve Peterson, owner of Broker Affinity Investments. This is actually my guy when it talks to apartments, multi-families. We both started our business in the last crazy downturn in 2009.
Yeah.
Me and him have been doing seminars probably for a while, for a decade. And we both play, when we say this, we have friends, I can say this is truly a real friend of mine. Over the last 10 years, or now 11 years since he started his business, he has accomplished a ton. He made tons of deals. He understands the real estate market when it comes to the apartments and multifamily better than anybody I personally know. He's past president of CTIM, past president of NARAB, and I'm really glad to have Steve Peterson on this tonight. So thanks again, Steve, for getting on the call for this evening.
Oh, good looking out, bro. I appreciate it. And just so I don't get beat up by nobody, KRAB. KRAB is the state board of NARAB. You know, it's
apologize.
No, it's all good. I just don't want to get whooped on. You know what I mean? By the NARAB gangsters of the world, because Steve was the president of NARAB. Somebody gonna, like Maurice Sturgill, our current president, Oakland, will put me in a headlock, man, and I wouldn't be getting up out of that. So I just had to make sure KRAB in the building. But thanks, bro. Appreciate it, man. I'm glad to be here. We've been rocking for a minute, as you said, road dogs in this business hustle and family and friends. This is how we do. And I think you, again, are showing, like I've told you before, this is amazing leadership by doing these Tuesday meetings like you've been doing, because we need to soak up as much valuable content and as much positive and productive information as possible in this time, because it's a lot of stuff coming at us from mass media. That's not, whether it's informative or not, it's not really going to build you up. You know what I mean? It's not, you watching the news all day, you watching Netflix. Sometimes, hey, what else are you going to do? But the end of the day is you'd be better off watching something like this so that you can get some value, that you can sharpen your axe, that you can become more. So when we come up out of this, or while we're in this, we can bob and weave, and we can swim with the sharks and do what we got to do to feed our families and build, build our communities. And so thank you, bro, for stepping up and doing this thing, and ready to get started, bro.
Definitely, man. A lot's been going on with apartment space, tenant rights, landlord rights. 30 million people so far filed for unemployment in America, way more than 2009. So first and foremost, what do you see right now in the real estate market here in the Bay Area, statewide, and nationally? As far as when I say real estate market, I'm talking about your specialty of apartments and multifamily.
Absolutely, man. And, it is a different market, by the way. So a lot of times people just say real estate. Man, real estate is broken up into multiple different markets: single family, condos, flip, and within flip and investment houses, there's wholesale, there's, rentals. And then in apartment buildings, there's, 2 to 4 units is really residential income. Apartment buildings really start at 5+ units. And then commercial real estate, you got office, retail, hospitality, which is taking it on the chin right now, industrial, and a bunch of other property types. As it relates to apartments, and we're talking 5+ unit, we had a very interesting time. And I think before the pandemic hit, we kind of been at a peak for about the last year. I believe in the last year or so, we've been not flatlining, but kind of just, peaking out. It's been running straight up or at an accelerated rate really since 2013-14. So when it runs like that, business and everything pretty much runs in cycles. So at some point, you know, it's not going to continue rolling up like that forever. But I say that we are at an interesting point because the the operation, the legal operational end of the business is already very difficult. They last year, an element of statewide rent control throughout the state has been passed, which actually, if you already have rent control, like if you're in a city like Oakland, Berkeley, San Francisco, Richmond, you know, down south Santa Monica, you know, and all the cities, I think all of LA County, I think, I don't know, but a big part of LA County also, you know, also has rent control. So if your city has rent control, you stick with the city laws, right? So whatever was going on prior to the state rent control, you stick with that. But now cities like Stockton, Sacramento, Modesto, you know, Bakersfield have an element of rent control. I will say this though about the state rent control, it's really not that big a deal when you compare it to the stringency of like what we have to deal with here in the Bay Area. But it's an element of rent control. And that's one thing. In Oakland, particularly, there has been a series of new laws, and I won't even go into all of them, but there's been a series of new rental laws passed. And what's been going on is rents have skyrocketed. I remember in 2000, we talked about 2009 or so, 2009, 2010, you could rent a 2-bedroom apartment in East Oakland, $900 to $1,000. Now I'm talking East Oakland, I'm not talking the lake, but
You're
just
talking deep East Oakland or?
deep East Oakland. You could get in for 900 to 1,000. You know what I mean? I know because I was doing deals in that time, and that's what the rents were. If you was getting 1,000, you was doing good as a landlord, and if you're paying 1,000 as a tenant, you was paying on the high end. That was 2009, 2010. Fast forward to today, a 2-bedroom in that same neighborhood is 2,100, 2,200. You know what I mean? Softening up a little bit now, maybe 19 to 2,000, but the rents literally doubled, and it doubled so fast that a lot of people just weren't able to pay that have been paying there. Now, what happens is, you know, as a result of that, landlords buy properties if the rents are low. What is a huge thing that has been occurring in the last few years is buyouts. So landlords with deep pockets will come and buy a building and say, look, you know, you're paying 1,100. That was from back in the day. Why don't you take this 30,000, 40,000, 50,000? You know, I'll buy you out of your lease. That way I can go then rent the space out for 2,200, let's say. So that's been a big trend that was happening. Issue with that is if you're a landlord, you really got to have deep pockets to make that work. Because when you buy an apartment building, first of all, you're typically putting 30, 35% down, sometimes 40% down. You need to have something in reserve. So, you know, a roof goes bad or, you know, something you need to repair. You need to have some reserves. And then after you do all that, to come and buy somebody out like that, and typically in the bigger buildings, there's multiple people getting bought out. You got to have extremely deep pockets. So that was been a big trend. And as a result of that, a lot of heavy gentrification in the areas, and the politicians of the world, of the space, will say, hey, we got to do something about it. And a lot of the tenants are saying, hey, you know, we got to do something about it. And it's been an imbalance. And I'm in the business, you know what I mean? As a broker, as a landlord, I've been in it. But I also born and raised in East Oakland, been a tenant, grew up in the projects, grew up in apartments that was, you know, should have been labeled as, you know, either condemned or uninhabitable. So I've been on both sides of it. So I never, like, a lot of landlords is like, oh, the tenants is evil. A lot of the tenants are like, oh, the landlords are evil. And so there's been this major imbalance. And as a result, the laws have kind of, you know, been put in place to help, you know, kind of curb the rent, you know, growth and the displacement. Unfortunately, a lot of the laws don't necessarily and actually help add to displacement, because what happens is when it gets so difficult, you know, to operate as a landlord, then a lot of the smaller landlords sell or move on, or going to sell and move on, and the bigger landlords buy. And the more bigger landlords there are to go and take over, you know, units, they're going to be able to buy out tenants. And at the end of the day, a tenant who might be looking at getting 40 to 50,000 to move, they may have never seen that amount of money at one time, right? And so a lot of them gonna move. So I say it's an interesting time because the market has been rolling and rolling and rolling. So much so that you've seen a lot of displacement. You've seen a lot of rents get crazy. You've seen just tenants just push to the brink, and then now you've seen the response from the city of Oakland, which I think they always respond too extreme. Um, there needs to be like a healthy middle, and hopefully out of this pandemic, there can be, because landlords and tenants, instead of fighting each other, at some point got to work together, man. And that's hard to do. It's hard to say, and some of the laws don't make sense, in my opinion. And again, like I've seen it actually lead to gentrification. So because a lot of the cities that have the most stringent rent control, San Francisco, Oakland, Berkeley, have the highest gentrification rates. You know what I mean? So one thing though, there's a lot of other things that go into that, and a lot of people have made a lot of money in the apartments. I think apartments are the best investment for a lot of different reasons. The income that they generate, the economies of scale, because like if you have a single family house, it's rented 100% of the time. Once they move out, it's 100% vacant. And so as a rental, you can make some money, but it doesn't have the economies of scale. Like if you have 10 units, 2 of them move out, you still got rents coming in from 8 units. As time goes on, rents go up, even with rent control. That brings your value up. Like we've seen over the last few years. I think apartments are the best way to invest. And in fact, last time the market crashed, Jay, apartment buildings came down, but rents only came down 5 to 10%. So if you were able to buy apartments at a great price, you still were able to make good cash flow. You know what I mean? So it is the best investment. It's a great business to be a part of. In the Bay Area, Oakland in particular, we are at an interesting spot. And my fear is that if things are so extreme, the smaller mom and pop landlord who's just trying to build they wealth portfolio for a legacy for their kids, like so many particularly black folks did back in the day, like my big mama, my grandmother who moved here from Louisiana way back, and blacks bought property, and that's what they did, and that was their way of moving up. And what happens now in this kind of environment is that if this kind of persists, the only people that can really have big success in multifamily investing are going to be the big pocket investors, the big pocket individual investors or families or corporate guys. They have the dough to buy a building and then offer buyouts to tenants. Whereas regular mom and pop buying a building, someone who also is probably more sensitive to what's going on in the community, are going to get pushed out as a result of this, because they don't have the economies of the scale to operate a building, profitably. You know what I mean? So
Right.
that's why I'm saying I think we had a critical point. If the pandemic, hopefully, we're in a grace period right now. Landlords can't file eviction.
How long can talk a little bit more about that? How long can't landlords not file? And what else can tenants do right now as we speak for our tenant rights as well?
Yeah, well, I know that's a bit of a gray zone. There was a 60-day non-eviction moratorium passed probably about 30 days ago. I know they were extending that out. There was talks to extend it throughout the whole year. No evictions. That's still kind of up in the air. Although this is one thing for tenants to be aware of, is that and then every landlord and tenant situation is different. A lot of landlords are reaching out to their tenants and saying, hey, we feel you, we understand what's going on. We'll put the rents on the back end, or we'll put the rents, when we get out of this, make payments over time. Some landlords and tenants don't have a great relationship. So what they're probably going to do is say, every penny that you didn't pay me now, as soon as we get back into regular action, they're going to charge you for that. A lot of them probably all in one time. This is uncharted territory. How we work this out, getting out of this, is what's going to be interesting, because I think it's really going to go to relationships. I think landlords and tenants who are going to figure things out the best are going to be ones who say, have a common ground. Hey, we all in this pandemic together. You was affected, I was affected. How do we work out an amicable situation going forward? Because here's the other deal. A lot of the landlords ain't getting the mortgage relief. A lot of them are. A lot of them are not.
Which ones are?
Well, first of all, anybody who has a Freddie Mac, Fannie Mae, FHA-backed mortgage on their apartment building, they getting some love, for sure. Then most of the bigger banks, the Wells, the Chase, most are getting some love from their banks. However, a lot of man, I got clients who got a lot of apartment buildings who are not getting breaks from some of the other banks that they have, and some of the smaller banks who a lot of time cater to the high net worth individual. They don't have the bandwidth like Wells and Chase does, or the backing like obviously Fannie Mae, Freddie Mac. So they're like, hey, we need y'all to pay. So some landlords can be more lenient with their tenants. Some landlords can't, because they're not getting that leniency from their bank. But the reality is you can't evict nobody right now. So anybody going to one of the tenants and not understanding what tenants or going through or working something out, that's you're putting yourself in a tough spot. That's why I think it's best to try to figure out how to work through this thing together, because it's you can't, like, if you're a landlord, you can't just say, all right, I'm bringing you eviction court right now. That that moratorium probably will be extended out. They were talking, there's talks about through the end of the year. I don't see how that could even be.
And the courts are closed right now.
Courts are closed, so you can't even go in there. You know what I mean?
And by the time the courts open back up, it's not like you can get in front of the line. They'll be behind for a couple months now here in the Bay Area.
The best thing you can do is, as a landlord, is to have a working relationship with your tenants. And if you don't have that now, it's a good time to try to build that or rekindle it. You know what I mean? It's been such a landlord tenant fight. And I don't believe that just this massive war it's not good for both parties. You know what I mean? It never is. You know what I mean? And the tenants got to understand that at some point it's going to come back, and a lot of landlords are not going to be so forgiving, especially the landlords who didn't have loans where the bank was giving them love. That means they were either having to come out of pocket, or that means they may be behind on their mortgage. So when it comes to be robbing Peter to pay Paul, it could get even uglier. I think the solution to it is to be proactive, to talk to your tenants. If you got property manager, it's to really come up with a game plan. This is the time where we're in this grace period, while there's a spirit. I don't know if you guys walking around y'all neighborhoods, or I live in Sequoia Heights area of Oakland Hills. I've never seen most of my neighbors, and I just walking around the last couple of weeks, you're seeing people outside waving. There's a spirit of, I don't know what you would call it, but there's definitely, like, I'm calling it a grace period. There's a goodwill towards other people, kind of general feeling. And while we're in this time, I think this is the time to try to build relationships. You know what I mean? Instead of just trying to smash on people. Like in the past, it's like, hey, you don't pay your rent, it's 3-day quit, just go through the process. Now is the time to try to literally work something out with them. And I don't know exactly specifically what that is, but while you can't evict them, you got to work something out there. As a tenant, you got to look and say, hey, I may not have to pay right now, but at some point I may need to pay. So this might be a good time to have a discussion with the landlord. Like, hey, when we get out of this, maybe here's a proposal I have for how we can get back on track. I don't want to leave you blowing in the wind. And that's what I think. A lot of people, when it gets to adversarial, it just, there becomes no common ground. Lawyers get involved. And, I don't think that's particularly for landlords, that's not going to be successful. You know what I mean? But I also think that's probably not in the best interest of the tenant. So this is a time where I think we really got to focus and dial in to solutions. And I think that, we can work through it. And on the market side of things, and just to wrap up, long explanation to your question, we haven't seen a big drop in prices because we haven't seen a lot of transactions go down to close where the sellers were in desperation. Right now, seller, if you're about to get foreclosed on and you have some pressure, if you're trying to do a 1031 exchange, everything's extended out. Banks can't foreclose. 1031 exchange timeframes are extended. So there's not a lot of pressure to get a deal done today. Probably going to change in a couple months. And so a lot of us in commercial, a lot of apartments, we are expecting a little bit of a price drop in certain product types, in certain areas, and in certain situations. Some sellers are saying, hey, I don't have to sell, so why would I sell at a discount? And which makes sense. You know, I mean, if you don't have to sell and you're making money, you know, you got tenants paying, you got a way forward, you know, you don't have to sell. You know, at the same time, every day I look in the market and I see some overpriced listing, and I'm just sitting here saying, well, I mean, I don't get it. You know, I don't know why. If the comps are here, I never understood as a broker why I would list my property above the comps. I always look at if the comps are here, I'm going to try to list slightly under. So I bring value to the marketplace, and then we get a pool of buyers that we can pull from. But I still see people putting properties on the market above what I think they should trade. So I don't think nobody in the apartment game in the Bay Area or anywhere else is saying, hey, I want to let me come and outbid 10 other guys to get this apartment building. That may be still happening in the single family world on a case by case, because it's different. People need to live certain areas, but as an investor, this ain't that time no more. You know, and I do think not 100%. I say it's a buyer's market. It'll really be a buyer's market when we come out of this, but I don't think we'll see a crash like we saw in '08. You know,
why do you say that? Why do you think it's different? Even though we have such huge unemployment.
Yeah, man, and it's 30-something million, right? Unemployed.
Right, and the numbers are probably going to continue to increase. They say up to 50 million on Goldman Sachs numbers.
So let me add, just before I go into the 30, let's just say 30 million. What is the workforce? I know there's approximately 400 million people in America. What is the workforce?
The workforce is 160 million Americans part of the workforce.
So we're talking about 20% of the workforce is unemployed now right now.
Correct. And that's a U2 rating. So when you say 20% of the workforce, you're talking about people who are not working. And then that's a U2 rating. And then you have the U6 is I am working part-time, but I wish to work full-time, which is even a higher number than that. Because now I might be driving Uber Eats or whatever part-time. I'm not included. Or I'm not getting unemployment yet, so I'm not included as well. The unemployment for 30 million is on people who are receiving unemployment benefits.
Man, that's crazy. And I think I did a video on this a couple of weeks ago about, I said, what's your battle plan? I'm just encouraging people to explore entrepreneurship. And I think if you listen to this.
That was a good video.
Well, thank you, bro, because I think that a lot of them jobs may not be coming back because a lot of those companies may not be coming back. You know what I mean? I don't know. But I know
Neiman Marcus filed for bankruptcy, talking about filing for bankruptcy. Hertz, you're saying it's going to be a fire sale for rental car market. They say they got boats. I hate to be the bearer of bad news. They're talking about that we got boats in the ocean of just cars on top of cars. So you got tankers of oil who's ready for Saudi Arabia to come here. You got, by the way, dial in to on the 19th about this, about oil. We have a specialist for that. We have tankers of oil. You got tons of cars. You got car dealerships getting 84 months of no car of interest-free loans. With 120 days is your first payment due. So
that's crazy.
That's so you're right. So some businesses might not come back. Your 24-hour fitness membership might not come back, as there's talks of them filing for bankruptcy as well. Just go jump did it yesterday, man. It's crazy time.
Yeah, and on that note, and I'll go into my thoughts about why it's not. I don't think it's going to be like the bad as '08, but I think that in for some companies, actually bankruptcy could be a good thing. Just like for let's say City of Stockton, City of Vallejo that went through bankruptcy in the last crash. I think those are two cities that came out of it actually in a much better situation. You know what I mean? And having the thing about bankruptcy, you go through it, you shed the fat sometime of all the debts that you're carrying. So a lot of that money that you're paying towards debts, that gets, reorganized.
Restructured, right.
And you can, which I believe a lot of the companies that file are hoping to be able to be restructured. But it's just like some entrepreneurs are great, some entrepreneurs are good, some entrepreneurs are terrible. You know, somebody's going to make it through that in a profitable situation. Somebody's not. You know, some industry, somebody who's, you know, back against the wall is going to rise up and make it through, somebody ain't. So you know, so that's why I think a lot, now's the time more than any other time, I believe, is for us to, you know, as Americans, no matter what your nationality is, as citizen, whatever country you are in, to think about entrepreneurship and think about your developing an independent craft. And, you know, we call it, you know, I mean, a hustle, you know, I mean, a side business, a primary business, but it's sometimes you have to independently generate revenue. We've been saying that, bro, for 11 years.
And you're absolutely right, man. I watched 60 Minutes on Sunday, and what we fail to realize is when we have these downturns in the market, you have a huge amount of age discrimination where people who are 50 plus or look older don't get hired. And you've seen people who are 50 years old making six figures, thinking they're doing well in life, and they get laid off. And now the reality is those people are not going to get a job that's going to pay them six figures ever again. They might have to take a $40,000, $50,000 pay cut, or 2 or 3 jobs. It is sad, and I'm like, man, these people need to learn how to start a business because you never will get back to that angle point unless you working 3 jobs and working yourself crazy in this whole wheel of America right now. So you're right about that, man.
Well, I mean, and now is the time. And here's the thing, though, you know what I mean? And that might be out of adversity. Sometimes, you know, greatness can come. And so I think we got a lot of resilient people. I think we got a lot of people that are going to, you know, turn around. I think it's not going to be as bad in real estate, at least in apartments. Now, in apartments, I didn't say retail or hospitality, because retail and hospitality might be worse than 2008.
Or office.
And office is a mixed bag because it kind of depends on what kind of office. Like, you know, medical office, for instance, medical office doing good. But if you're in, like, for instance, WeWork is going through it right now, right?
Right.
Big
That's what I
corporate
think
offices. About. And then here's the other thing on office. We all are figuring as entrepreneurs, you know, I'm in my office now, but we figured out how to do more with less. So a lot of so the office has been becoming more and more virtual before this. But now, as we figured out how to operate virtually, the need for big Class A office spaces in downtown San Francisco, if you will, are not that big. It's not that big of a need. It's not a need, and it's like a luxury. You know what I mean? So it's dialing into that. But I think in the apartment industry, you know, people food, water, shelter goes back to necessities. We're talking about office space. And certain office spaces may end up being more luxuries when we thought those office spaces before were necessities. Well, homes, apartments are necessities. Now, why I don't think the prices are going to drop like they did in 08 is because the lending criteria and the amount of equity that has been invested in apartment buildings and the amount of buildings that have been paid cash for. And I don't know if that's a legitimate term, but I have seen several people pay cash for apartment buildings over the last 10 years and not get them financed or put 50% debt on them, put 40% down at closing. To get a loan, you really got to go through some stringent getting a loan, even, you know, and when the height of the best time getting a loan was tough. So I don't think you'll see the mass exodus of people just throwing their hands up, because in 2008 and 2009, when we didn't know the financial bottom, literally people were just throwing their hands up. In apartment buildings, what would happen when the bank comes and takes over, when the landlord throws their hands up, and the reason why that's not good for tenants is they stop paying the water bill and they stop, fixing stuff, and they stop, taking care of the property. And that's why I say that there must be balance between landlords and tenants, because housing is important, and the people who take care of the housing, it's critical. I think it's important that more people from a community, if there's more people from a community who own housing and are leasing housing back, the more sustainable it could be, because you have a vested interest. So I've been teaching and preaching that, for the last 11 years plus, that if you from East Oakland, you need to buy in East Oakland and lease out to people in East Oakland. But there needs to be some unity there needs to be unity versus this clash, because if a landlord throws their hands up, then what's going to happen is the bank's going to come in. And then the bank's going to hire a receiver, somebody, a third party, hired by the court, and they come in and they take over the building. And that was happening in mass at the last cycle. And I just think this time you're going to have people have more of a vested interest, number one. And then number two, the government is basically financing most of this whole situation. Now, like Matthews, you said this, you've been saying this for years, that the government is just printing money, running us into trillions of debt. You were saying that when the last stimulus package came. I remember when we first met, we were talking about the stimulus package and where we think things are going to go. And I think, so I think in the short term, the next 3 to 5 years, that all that money being pumped in the system kind of prevents the price points being dropped. Also, and the third reason is there is a lot of mortgage money in the market looking for particularly apartment buildings. And with office, retail, hospitality taking a hit, the money for commercial is going to even more so pour into multifamily and industrial. Those are two product types that are really going to get the money.
Multifamily, industrial?
Multifamily and industrial is doing great. Online, especially in California, why is that? Online shopping, cannabis, you know what I mean? So those two industries are really driving that, but also other logistics need. I mean, logistics are huge. And that's another reason I think Stockton and the Central Valley are going to be, I think Stockton is a great place to invest, by the way. And I could see that being a logistics hub in the next 5-10 years for sure. It's proximity between the Bay and SAC. And so I think for those reasons, just, people have more of a vested interest because they put more cash into the deal. And the loans were, easier, the loans were harder to get. So then there's so much money in being pumped into the economy, which could be a bad thing long-term though, but at least that. And then number three, there's so much particular mortgage money when there wasn't back in the day, but there is mortgage money for apartments. So while I don't think the prices will crash, I think we'll see a price adjustment for sure, maybe 10, 15%, I don't know. But I do know, I think it's going to be a great buying opportunity for people in the near future to get into apartments. And so, and whether that's here and I think in the Bay Area, you just got to have bigger pockets. I think Stockton and Central Valley is going to be a great place to invest.
When you say bigger pockets, how much money do somebody need to possibly bring?
Well, you got to have right now, you got to have 35 to 40% down on an apartment building usually to have the numbers. So the way apartment building lending works primarily is the lender is going to look at the debt coverage ratio. And so that's the amount of that's the ratio between the net operating income and the annual debt on the property. And so that ratio, at 1.17, 1.15 is like where it absolutely has to be. A lot of banks want to see 1.2 and above. So 1.2 would mean if I have $100,000 a year of mortgage payments, I have $120,000 of net operating income coming in, right? So that there's a spread of 20 grand. That's your money as an investor, basically. The bank needs to see at least no bank is doing under 1.15. And really 1.17 is the lowest I've seen. 1.2 is kind of the target. So that means that because our rent per unit versus our price per unit ratio is so tight, you got to put like 40% down in Oakland, San Francisco, you might have to put 50% down. So I think that's why you got to have, and we're talking apartments, we're talking 5+ units. Most buildings are 200,000 a unit and below and above, although I'm seeing a lot more deals under 200,000 a unit these days. So 5 units is $1 million. So that's going to be 40% down is 400,000. So I think, the regular, but there are moms and pops that can swing 400,000, you know what I mean? But I just think, a lot, it's just tough, with everything to do to go in there and buy apartment. But I think if you're going to buy, like, for instance, a 5 or 6 unit in Oakland, I think you'd be better off buying a 4-plex just because you can get in with less money down and the financing, is a little bit better versus if you want to buy apartments, you should get like 15 or 20 units in Oakland. You know what I mean?
Right.
A little bit. If you're only going to get 5 or 6 units, you might as well go on and get a 4-plex.
Right, because the criteria, huh?
Yeah. But you know, that's just today. The prices may come down less than what I'm talking about. I mean, they might come down more than 15, 20%. But I will tell you this: in 2008, when it crashed, and in 2009 and following, when I was seeing stuff at 40,000 per unit, 50, that blew my mind, because only months previous or years previous, properties were trading 150 to 200,000 a pop per unit. And now you're talking about 40. That's why I'm like, man, I don't see that. If it would have happened, again, a huge buying opportunity. But I also think another thing to add on to why I don't think it's going to crash like that is because of this grace period, right? Because of this whole situation. More like Fannie Mae, Freddie Mac stuff. They're not coming. They're not going to be gangster like that to take snatch properties. The bigger banks are going to be a little bit more, or should be a little bit more lenient. Some banks are going to have to just do it. They are going to have to take property and do stuff in order to stay alive, if they don't have the backing. So, I think as a landlord, if you own some stuff, if you're in trouble, now is the time to reach out and to work something out. You know what I mean? And what I did learn about the old market crash is that there were a lot of landlords that I know that were able to either work modifications or workouts to prevent foreclosure, but they were only able to do that because they were bringing in the rents to be able to do so. So it goes back to the relationship piece, that's a business thing, man. That's whether that's insurance, right? Real estate, anything. It's a relationship in the internet business of the world.
It's about relationships too.
Relationships, man.
Besides Amazon, everything else relationships.
But even them, I don't, how they are moving all these products over the world like they are. They have a distribution network, and they develop that over the years. So, that's just what I think that we need to do. And listen to everybody. Sometimes people think, oh, the market's prices drop, and then people get scared. And that was the worst thing that happened in 2008. I was pitching deals to so many people. And my partner told me this the other day. He was like, man, I remember you told me about a fourplex for $235,000. Then you called me and told me about a fourplex for $290-something thousand. Then there was one for $300,000. He said to me, now he owns 4 fourplexes, by the way. But at that time, he was like, he told me, it was like I was speaking a foreign language to him, because all he was thinking was, oh, the market's all bad. That's what's all in the news. I'm not going to mess with that. Knowing what he knows now, he was like, man, I wish I would have snatched all of that up.
But we were young back then too.
Yeah, exactly.
And that's one thing I wish, I missed up. Or I knew what was happening. I see what's happening in the world, but I don't think I had the proper amount of resources or the intelligence last time to really take advantage of it. I was in New York Life at the time. I see the downturn, start my own business, but I didn't have the resources or the money just to really just take advantage of it. And this time, oh, okay, it's grave dancing time. It's time to eat. This is where you become millionaires during this period of time. And just like you had in the 1930s. And so that's why I have this, where people can figure out how do you eat during this market? I have an oil person. And I feel like it's time to eat if you're open and you're prepared. You have cash, or you have cash resources where you know where the money's at. So let me just go ahead and grab it and present it.
Well, and here's another thing to think about. And even if you don't have the cash or cash resources, if you got the hustle and the ingenuity, because another thing I think we'll see is a lot of seller financing, because people not finna just walk away from their property. If you put 40% down, back in the day, you could have bought an apartment building with 10% down. No lie. It was that's why a lot of properties got foreclosed on, because people was only putting 10% down. And then they got that off a HELOC from their house. We were playing around with all this funny money, basically. But if you don't put 40% down on let's say a $2 million property, let's just say, you ain't just walking from that, man. You're gonna figure out, or you're gonna dial in, or you're gonna go down with the ship. So what I think we'll see is kind of old school real estate, where you'll see lease options to buy, sellers carrying seconds, sellers willing to participate in the financing, wraparound mortgages, stuff like that. Because if I'm a seller and I can't get my price, and I got hard-earned equity in that property, and I don't want to give it away, and I can actually sustain, but I do want to move on in some capacity, then I can utilize seller financing to help me to get my price and help me to get the property moved. And it actually is a great strategy if you know what you're doing. So I think even if you don't got the cash or the cash resources, if you've got the ingenuity and the hustle and the ability to go gain information and tap in, you can put stuff together. But to the point of the people listening to this, either now or on YouTube, is you need to build your team. You need to build your resources.
Who's
Tap
on your
in.
team when you say that?
Yeah. So different things, right? But like, for instance, I would say if you're a real estate investor, let's say, or someone who wants to transition into real estate. Now, there's going to be people as real estate investors who this is what they do, like full time, full grind. Then there's going to be people who say, I want to invest in a real estate as a part of my portfolio. Like maybe I have a job or a business where I do something else, but I want to invest in real estate, right? And then there's the guys who like, this is my main business. So it's a little bit different depending on how you get out, but either way, you need to have some key team members, okay? You need to have, first of all, you need to have a financial, either financial planner or a tax person, or you should have both. Financial planner, talk to Matthews, a tax person, because what you should do first when you're talking about investing is develop a plan. Investing is a plan. It's not a product. It's not a service. First and foremost, it's a plan. You know what I mean? And then you can figure out what product or what you want to invest in based on that plan. So in other words, you say, look, I'm investing in real estate because when I get to be 60, 65, 50, for whatever, I want to be able to either retire from my job or just not rely on my job or business income. I want to have enough passive income coming in to take care of all of my living expenses. So if my living expenses are $10,000 a month, I want to have $10,000 a month coming in from residual passive income, right? That's an idea of a goal that you now can create a plan around. That's the first step. So you need to talk to a financial person to put something in motion. Doesn't mean you need to go put a bunch of money in stocks. You should have some sort of insurance. A lot of real estate investors believe in insurance. Most all my clients, they have life insurance, they have obviously property insurance, but a lot of people carry umbrella liability insurance. There's a disability insurance. So having insurance and having that foundation together is important. But talking with an advisor that can help you to formulate a plan, say, I want to invest in real estate. Where am I at now? And then, they may say, a lot of people are conservative. They say, don't go out and buy real estate. You're not ready yet, right? But if you're in your soul are ready to go buy real estate, and that's you, some people are going to tell you purely financially, nah, don't do it. But there's people who wholesale deals and do real estate deals as their living and make a good living. And if many people took that risk and started that when they were at a bad spot, and it may not have looked like it was time to go. But you need to have some sort of financial and tax guidance to what you're doing. For instance, let's say you want to go out there and flip property, which is really not investing, it's dealing, it's tax different. But let's you say, hey, I want to go out and invest in real estate and flip properties. And then you go out and flip some properties, make some money, and you're going about your life, and then you get hit with an IRS bill. And you may not have even thought about that or knew how to structure that into what you were doing. And had you sat down and put together a plan up front, then you could have strategized how to, work within, legal, formulas to be able to operate in a tax advantaged way. Maybe you set up a self-directed IRA and you roll all your profits in a self-directed IRA, something to that effect. The bottom line is you just have a plan. You start with your financial advisors. Then what you're going to need is you're going to need a team to help you find deals. You know what I mean? At the end of the day, this whole real estate business is about finding the opportunities. Yes, you can go on Zillow for residential. You can go on LoopNet for commercial. But you ain't gonna find the real deals on Zillow and on LoopNet and where Alibaba and the 40 Thieves and them are looking. You gotta find, you gotta uncover the rocks and stones, and you need to have a team of people. And so a broker and agent is important. It's one that understands investment property though. Even if you residential, there's people who sell houses and homes, luxury houses, first time houses, and there's people who sell flip property, investment property, rental property in the residential world. So you need to work with somebody who knows or specializes in the thing that you want to invest in, right? Because they're going to not only know the ins and outs of the business, More importantly, they're going to know where the deals are. And if they don't have something today, like a lot of times the client hit me, hey man, what do you got? And I may or may not have something at that moment, but every day I'm banging out phones, I'm banging out my relationships, I'm sending out marketing looking for deals. So I have a list of people. When I come across a deal, I'm going to call and say, hey, I got one. I know their criteria. I know what they're looking for. So you want to have somebody like that on your team that when they get a deal, before they bring it to the market, if they even bring it to the market, they call you. Also, there's a lot of wholesalers out there. So as an investor and you want to buy an investment property for cash flow, it's good to have some relationship with the wholesale guys who are out there. What wholesalers do is they find properties at a cheap price, tie them up, and then sell them to investors. And they make a spread between what their price is and the price they sell it to investors. Tough business to be in, but a lot of guys start out as wholesalers. So if you want the end deal, you need to have brokers, agents, and wholesalers on your team to find properties. Then if you're gonna own rent investment property, meaning that you hold the property for the business, trade use, or the rental income purposes, it's going to need to be managed properly. So you should have a property manager, or if you're not going to hire a property manager, you need to get familiar with it. I advise hiring a property manager, making sure you got a good property manager out there that can operate, especially in the Bay Area, because of all these laws. You need to, I'm in the business and it's hard for me to keep up with them. You know what I mean? And this is what I do every day. So if you're not doing this every day and you're trying to manage property and run your business or run your work, what you're doing, just hire a property manager. That's an important key piece. Hire that property manager, do that. Then what you need to do is have an internal way of operating, okay? And you may need to either get an assistant, a virtual assistant, someone to help you out with marketing, looking for properties, someone to help you out processing the review of properties. So I suggest to everybody, I use a virtual assistant. I know you use a virtual assistant. Virtual assistants are a great way if you're sending out a bunch of mailers or postcards, digital marketing, that help you out with that. And then they're a great way to help you to process all the stuff that comes in. And so those are just some of the key pieces to your team. You know what I mean? And then just your resources. Like, for instance, I always want to network with people who are successful in business or successful in real estate, so that if I have an opportunity, I can call and present the opportunity. And they may say, no, I don't want to invest in that, or no, I don't do it. But like, if every time, for instance, I got a deal, I always call you, hey, this is what I'm working on. And you may say, hey, well, talk to this guy or talk to that person.
Right.
I mean, and so you want to have just resources with people who are professionals and experts in their industry that you can, hey, I got an opportunity. I maybe don't have the money to invest. Can you invest with me? And they may say, man, I can't invest. Maybe talk to this person, or maybe talk to that person. So just building that network up is critically important. And I think also having a support structure of like-minded individuals, which is why we do what we do with these seminars and webinars, the meetups. You need to be rocking with people who are on your same wavelength. Because if you are trying to go out and invest in real estate or start a business, or expand your business, or you have a nonprofit, you just have a vision and you're around other people all the time that don't, you're going to be around people who don't share your vision. That's going to happen. But if that's all you around and you don't have nobody that, you can run with, or even just, be on the same Zoom meeting and have some commonality, it's going to be tough. And this business, the world of real estate investing, can be very difficult. The world of entrepreneurship can be very difficult. So you need some people that you're running with, that you're in line with, whether that's online or you're tapped in somewhere else, but you have a network of people that you can run with, man. That's if that's all you had, you can start with that and go from there. Because everybody may say, I don't have money, go sit down with a CPA. Oh, and the last thing I left out, and I know some good ones, but not my favorite grouping of people, is the attorneys of the world. You know what I mean? And I do know a couple of good ones, so I love y'all out there. But, can't live with them, can't live without them, but you need them on your team, especially to set up the entities, LLCs, the trusts, and if you're bringing on investors, to make sure they set up the documents right. A lot of us entrepreneurs just really don't vibe with lawyers, but it is important to set things up right, And like if you're setting up an LLC or an S corp or something like that, I really do advise do so with an attorney that knows what they're doing versus just going on the internet, because there's going to be some key things that you need to think about when you're setting up your operating agreement, when you're setting up your bylaws, that an attorney that knows what they're doing can help you out with. And so as entrepreneurs, our brains work way different than the brains of attorneys. So even just having a meeting with an attorney and putting some things together can be stressful for the entrepreneurs of the world, but you kind of need to rock with them. And better to work with them up front than have to work with them on the back end trying to navigate through
Cheaper. Way cheaper.
Right. You know what I'm saying? So, I mean, and I know there's some great attorneys out there. I know a few great ones for sure. I love y'all. But, you know, a lot of us just, especially the entrepreneurial mind, the way our minds work, and attorneys, the way their minds work, the way they communicate, it's a lot of, those are just two wildly different personalities that often always clash, but we need each other. So it's like a marriage, man. You know what I mean? So we, you know, you gotta figure out how to make it work. You know, and operate your business. You got to be legally protected, especially when you're setting up your entity up front. That no matter whether that's not just real estate, I think that's all business in general, man. You know, so that's just some of my thoughts on the market, and then some of my thoughts on teamwork in it. And getting rolling.
A quick question also before you open it up, one last question. You talked about lease to own options, seller financing. Yeah. You're not going to hear that every day. I know what books or how can I get educated on doing seller financing, lease to own options, and understand what they're doing, because everybody else would say, go to the bank, goes to the bank, goes to the bank. Where can I get that information at?
Man, it's a course. I'm going to just tell you this, the best course on lease options, on seller financing, on all that stuff. And I've been through a few of them. It's an old school, but it's the best out there. And you probably can find it. In fact, I lost my book a while ago and I ordered one on my program off of eBay. It's the old school Carlton Sheets, no money down real estate system. And he was the biggest infomercial guy at the time. So a lot of people, Carlton Sheets. I ordered that course. That's what got me into real estate. And that's not only what got me into real estate. That's what encouraged me to get my CCIM designation, because he talks about through his course to work with brokers who have the CCIM designation. That course, man, that's a bad course, man. You know what I mean? Because he goes into all the creative financing strategies, and he breaks them down on how to negotiate them in which situation. He even had what he called it. It was a COG chart, creative options guide. So if the seller's in this situation, like you would work down this chart and say, okay, this is the best situation for a lease option. This is the best situation for a land contract. This is the best situation for a wraparound mortgage. This is the best situation for a subject to financing. That is the best resource for learning how to structure creative financing deals. You know, as the Carlton Sheets, no money down, real estate system. If you go on eBay, or probably, I don't know if Amazon, but because it's probably not in print anymore. You have to buy it from somebody else who got it. That's the best out there. Now,
I got the Robert Allen No Money Down book before.
I just was gonna say Robert Allen also has a great No Money Down book. That one is really good. There's a book an old school book I'm reading right now. It's called High Leverage Real Estate. Forget the guy, one of my boys, Lawan Payne. Shout out to Lawan, another young entrepreneur. He gave me that book. And this was like written in the 70s. I've never seen it before. I'm halfway through the book, and this is a great book. So it's called, if you just Google High Leverage Real Estate, you can actually buy that on Amazon. And so those are a couple resources. I actually have a whole couple of presentations on creative financing as well. You could tap in with me, subscribe to my YouTube station. I'm going to be doing not this seminar tomorrow, but the next seminar, I'm going to be talking about creative financing strategies, because again, that's what I think is a method that can help lead us navigate through all this stuff. You know what I mean? And as much as and even if you just go to YouTube, creative financing, you'll get a whole bunch of stuff pop up. Robert Kiyosaki, he talks a little bit about it, but Kiyosaki is more, he's saying, hey, I want you to have money in the bank before you invest, which is actually a great idea. You know what I mean? But he does talk about no money deals and the right kind of no money deals, because a lot of people go into deal no money down and then it's a bad deal, and that's why the seller was having to sell it that way. So you do still need to analyze the properties, make sure the numbers make sense. But I think that there's going to be a lot of because sellers have equity and they're not going to want to give the property away. But if they're not getting their price, they're not going to be able to sell it either unless they discount it. So I think that that'll be a great method to help us lead us through the storm, so to speak.
Thanks, man. Let me. I'm moving this. If you guys have any questions for Steve or me, please go ahead. Hey, Brian, you got a question?
Actually, I don't.
Well, okay.
I do.
What's up, B. Mitch? What's going on, man?
I'm hanging in there, bro. Hanging in there.
One day at a time, man. One day at a time.
Yeah.
Well.
Yeah, Carlton Sheets passed away in January. You know that, right?
No, I didn't. What?
Yeah, he passed away.
That's a legend in the game. I didn't know that, Brian.
Yeah. I just found it out recently.
Well, I mean, he was old back in
the 80s, yeah.
But he, you know what I'm saying? I honestly, when you used to ask Jason, like, what's the best? That's the best that I've come across, man. And I've studied that and studied that and studied that and studied that. My first deal I ever did was in 2003 on a 6-unit building, Pueblo, Colorado. Great town, by the way, Pueblo, Colorado, another great place. No money down, least option to buy. I had to do $1, but I borrowed $1 to make it happen. You know what I'm saying? So I actually, that was my first deal, man. And I had ordered that course, but maybe, 8 months before that. I had listened to it 3 times. So I went out there and made something. Now I didn't make no money on that deal. Ended up, not exercising my option. But it was the best experience I had in my life and in business, man.
Even though some folks think that those guys are infomercials are full of it, but just like anything else, anybody you teach, you got to go out there and apply it. And it takes time. It ain't gonna happen overnight too. Some people want quick results.
Brian, what you just said that's what you just said. Now, all infomercials are not created equal. That's why I said that's the best one. I know it's a lot of them out there now. If you take the information and you sit it on the shelf, I don't care how good the information is, none of it's gonna help you out. You know what I mean? I had went through that whole course literally 3 times, like reading it, but also he had cassettes and CDs.
Yeah.
I don't know how many times I listened to the CDs, but I know I read it literally 3 times, and that's what had got me started, man. And like, when I think about it, all the courses, and I've gone through the whole CCIM curriculum. By the way, if anybody now not so much about creative financing, but anybody want real investment knowledge and game, the realest game you can get out there on understanding real estate finance, value analysis, market analysis, lease versus buy, advanced investment analysis, institutional. That's the CCIM Institute, and the curriculum that they have for their core classes. There is nothing better. It's very intense. It's not cheap. I paid a couple $100 for Charlton Sheets. One class of CCIM is like $1,500. You know what I mean?
Okay.
In order to get the designation, you had to go through 4 core classes, 2 elective classes, another course before you take the test, and then you take the test. It's like an 8-hour test. But that the CCIM Institute and all the core classes and their elective classes is the best investment knowledge that you can get on just pure real estate investment game. It doesn't go too much into the creative financing though, and that's where I think, which I think is incredibly valuable. But I first heard about CCIM through Carlton Sheets' program. He mentions that, you know what I mean? And he says, if you're going to work with brokers, you need to work with brokers who are creative and understand how to make deals. And he said, especially if you're doing a commercial building, he was talking about apartment buildings at that time. If you're going to be doing apartment buildings, you need to find a broker who has the CCIM designation. That stands for Certified Commercial Investment Member. Now, he said that back in the day. And here's what he was, and I'll leave with this. Here's what he was saying in that context. When Carlton was making offers, what he would do go to the listing agent and say, hey, I know that there's 5%, 6% commission. What I'd like to do, you represent me, and you get the full, it's all good. You get the full listing commission, right? So say it's 5%, you get the full 2.5% listing commission. You know, but if you're going to represent me, what I'll ask you to do is not give me the other 2.5, take it in the form of a note, promissory note. That way Carlton would get in with less money down, because that's 2.5%, but on $1 million, that's 25,000, you know, so on and so forth. Carlton would say, hey, you're going to get the lump sum of cash, and then you're going to be partners with me in this deal via this note. And then if I ever sell it, you're probably going to get the listing. And so when he mentioned that to, you know, as a method, in his first deal, Carlton started working as a real estate broker, and he used his commission as his down payment to buy his first apartment building, which is how he kind of developed the course. So creative thinking. I know brokers, we a lot of times we feeding our family with that money, but if you about to double pop one, why not feed the family and then make an investment at the same time? Now, if somebody approached me on a deal like that, I'm Jiminy Cribb. Like, hey, let's talk about it. Let's work out a deal. You know,
basically he learned how to leverage money and stuff like that.
Exactly, and that's you guys. And now here's the deal: you can take that same concept to go buy a business, to go buy a company, to go buy, you know, a portfolio, you know, of whatever. You know what I mean? It's not just real estate. And so I just think that, like Jason, like we were saying from the gate, we as an economy and in America and in the world, we need more people to be entrepreneurs and producers, and not just the position of entrepreneur, but a productive entrepreneur that's bringing value to the marketplace. We need
got to bring value to the marketplace more than ever right now.
More than ever, man. So everybody, like Brian, we've been rocking for a few years, man. You are an entrepreneur. So last time I seen you talking about the properties that you acquired and your plan to move forward. From when I first met you, man, you came a long way, bro. So you know, the time is now for brothers like you and people who, if you got an idea, if you got something inside of you, man, that's why I say, even if you don't have the cash and resources, but you got the ingenuity to go after it, then go after it and tap in with the resource. You tapped in with Jason, you listen to this, you tap in with me, anybody else in your network who's bringing value, tap in with them. Instead of, I'm not telling you how to live your life or whatever, but instead of watching Netflix all day while we in
I don't do that, bro. I don't really much watch television. I'm always researching, trying to learn, and I want to be retired by 55. I was going to take it early out. Now, the reason why I didn't, because I'm currently got debt and I still got to pay my current bills and stuff like that. So I'm just using that to my advantage, even though we're going through some stuff there. But I got limited hours, but I got to use this time to.
Thank you, Brian.
You know,
use this time to sharpen your axe. Use this time to advance yourself. And what worries me, y'all, is that so many people is just like, yeah, man, I'm watching the Tiger Dude on Netflix. You know what I'm saying?
Yeah, some folks are just comfortable, and they don't want to get out the rat race. They want to make certain sacrifices to do certain things to better themselves.
People, I'm getting my unemployment money. I'm getting my stimulus check. Which if
got until July 13th.
And look, man, get it while you can get it, but don't rest and relax. It's the time to relax. Let me say that. It's the time to relax and breathe. But it's also, and we are in the time of, it's time to go after it, man. You know what I'm saying?
But you mentioned, what's the name of that? CC what?
CCIM, and it stands for Certified Commercial Investment Member. That's an institute. CCIM Institute. It's the designation you get. It's also a network of people. So like we meet the NorCal CCIM. We used to meet every second Tuesday at the Sequoia Country Club. Now every second Tuesday of the month we having Zooms and stuff like that.
Certified investment member?
A certified commercial investment member. And I tap in with me, B, I offline, and I can tap you into the website and the leadership, because that's something that you absolutely should be pursuing. Absolutely, you know what I mean? Be pursuing, because whether you get the designation or not, take a few of them classes. Put it to you like this: them classes, every single class I took, I learned a lot, right? But every single class I took, I closed the deal with somebody in that class. because somebody else had spent 1,500 and was in there for a week trying to advance. And so we was all in there together. Oh, what do you do? What do you do? Okay, what deals you work on? Every single deal, every single class I took, I closed the deal with somebody in that class. So, and that's what I'm talking about, tapping in the resources, the connections that you can, that you can go and build up. And so this is the time for that, bro. Brian, I think that'll be perfect for you, man. So, you know, let's think on it.
They haven't currently stuff online since because currently of the pandemic was going on right now.
Yeah, they are having a lot of stuff online. Like us as the local area chapter, we having stuff. I think there's a webinar coming up with our national economist, but then the Institute they always have online classes. So all their online stuff's rolling as usual, but the core courses are also being administered online. And so those are the core courses that you have to go through to get your designation. Those are also being offered online right now. So, you know, never as good as being able to sit in there and network with the people across from you, but soaking up that game, soaking up that knowledge, especially now while we're down, is one of the best things we could do.
Yes, poor man. I got a couple of designations behind my name, say for my Series 65, man. It's right now. I think people get lax. That extra $600 bonus is July 13th. You know, and everybody gonna be looking for a job at the same time. Y'all playing. You should be looking for a job now while everybody else getting comfortable. You gotta find that blue ocean, that blue wave, right? And that's where people are messing up, I think, right now. Everybody gonna go into the job search with everybody else at the same exact time.
Same time.
And it's gonna be way more competition, and it's gonna be harder for you to get that job. You gotta keep your mind right, your health right, your spirit.
Right. All the balance, all the balance.
And get on your hustle right now, because you're gonna have to put in more work than you probably had to do before in this market. You're gonna have to make way more phone calls because now the marketplace got smaller, and you're gonna have to make more noise because more people are on Facebook doing videos now, more people doing Zoom and everything else. So how can I make my voice heard with all this commotion? Why is it just? It's not even true stuff that's coming out in this world. And then you're right, connect with the right people, B. I connected with the right people. You hear all these, you hear a lot of people talking about they haven't got their PPP loan or these other programs. But, you know, I tapped into the right person. It wasn't that hard. I tapped into the right person I had a relationship with already, and I got that money, and it only took me a couple phone calls, right? It's time waiting.
That's what it's about, bro. And that's why I think we're urging people, make those connections, go after it. You said something, hey, don't everybody, much people gonna be applying for jobs at the same time. So get out in front of it. If you're saying, hey, look, I'm a job person, I'm an employee, this is but get out in front of it though. Don't sit back. It's not the time to sit back and relax. And so many people are like saying, I'm bored. But really, if you're trying to build yourself, if you're trying to advance, it ain't no such thing as bored. You know what I'm saying? It might be on a Friday night, you might used to be at a restaurant or something like that. But in the context of everyday life, we got to be going after it right now. You know what I mean? The way I'm looking at it, like this is the battle zone. You know what I'm saying? I'm looking at it's not just, I'm not just doing this for me and my company. I'm rocking for the economy, for the community, for where we at. We need production out here. You know what I mean? So we done lost some trillions, y'all, and they might a stimulus money here, stimulus money there. That, hey, we lost trillions, man. We gonna feel that somewhere. So we got to step up. We got to go after it. And I think all of us that's listening, let's encourage somebody to do the same. You know what I mean? And point each other to resources of value where we can build together. And that, particularly talk about the Black community, we've got to work together. And I think this is a great opportunity for us to collaborate and to do that in this pandemic. I think I've said this to a lot of the realtors that I work with. And if you don't know, Realtors is a member of NARAB, National Association of Real Estate Brokers. We are Realtors as opposed to Realtors. Back in the day, Blacks was not able to join the Realtors. And so in 1947, we formed the Realtors as a way for us to be able to have a professional association, and we stand for democracy and housing. What I've been talking to a lot of my Realtors peoples and fam about is, we got to mobilize the people to understand that when there's some calamity, this is our shot. You know what I mean? You can go this is the time to shoot your shot, to go after the properties. So many of our buyers been getting outbid by cash buyers and multiple offers and all that. So now is not the time to say, oh, forget about it. We don't want to go after that. Now's the time to double down and go after it. And so, we might need, figure out, navigate your personal stuff, the market, all this stuff, but have in mind, hey, I'm going after it. And if we can do that collectively, we actually can come out ahead of this, in this whole thing, but we got to do it together though.
You mentioned about the stimulus thing. People who make 99,000 or less is eligible for the 1,200, and a married couple with 198,000 or less is eligible for 2,400. But I made over 100,000 with my job and no current side hustles. I only got a little chump change, like $70 they gave me.
Well, and that's the thing.
So,
right. What they're going to say is you're a top 10% income earner. B, you got to understand that in America, man. So now they ain't going to help you out. They think you're doing too well in life, right? But they didn't realize you're in the bag.
Well, exactly. And here's the thing anyway, is even if you got it, like if you can get it, you got it, that's cool. But like, I think you do, if let's just tap in and go hard. Let's just tap in and go hard, man. You know what I mean? And figure that is the stimulus, you know what I mean? And let this whole situation stimulate us to go out there and create and to build. And, we can do it. You know what I mean? Everybody ain't going to do it, but we can do it. Whoever listening, whoever tapping in, we can do it.
Yep.
I mean, and I'm confident. The one thing about this pandemic is it's awakened something in me to just, what I'm saying, like for instance, just to just bring people along in this entrepreneurial journey. Because I've been all about building my business and real estate. But I think it's whether you're in insurance, you're in real estate, whatever industry you're in, let's lock arms and let's go to work, man. You know what I'm saying? Netflix will be there, bro. Like it'll be there.
Yeah.
You know what I'm saying?
Some folks, just be comfortable and watch too much television, which I call it.
Right. Exactly.
You know
And we was talking hoop the other day. We'll come up. It's supposed to be the hoop playoffs. You know what I'm saying? We don't have that right now. So a lot of us would have been watching a lot of hoop. We don't have it right now. So instead of just
and then some of them athletes, some make good investments, and some, unfortunately get caught up in struggle, making a bunch of money, and struggle.
That's a whole another thing, because a lot of athletes is living also check to check. If you make
that's what CJ McCollum said, because the NBA said we're going to take a 25% pay cut, and he already said before, he's like, man, 25% of the players living check to check in the middle of the season. I'm like, brother.
Yeah.
You make way more money than anybody else in your age group. The average millionaire in America is 57 years old. Yeah. And you make way more money than all your partners. Y'all tripping.
So, but if you make $5 million and you spend $5 million in one, you behind. So, and that's the issue. And a lot of us, I love the sport. I love sports, man. And it's tough not being able to watch sports. And I got a son and daughters, they're into sports. It's tough. But the time that we would have been invested, or relaxing to watch that, instead of just simply going on a Netflix, or instead of just simply doing that, let's take this time to say, yo, there's something major happening in the world. Let's hop on this podcast. Let's hop on this YouTube. Let's hop on this book. Let's hop on this Carlton Sheets. Let's hop on this, Matthew's having the 6 o'clock. Let's hop on that. You know what I mean? Because like you said, 30 million is unemployed. You know what I mean? A lot of them jobs ain't coming back. A lot of industry, I don't say ain't coming back. A lot of industries been turned upside down.
Yeah, I was telling Jason in the Facebook message about almost 3 years ago, in October, 3 years, former coworker, when he rested P, he was really heavy and overweight. He had a heart attack in the parking lot and died. And I was on the way to work, seeing him. A couple of my coworkers trying to save him. Yeah. They did his best, man. But
life is too short. You gotta, make the best of each day. You know what I mean?
Yeah, exactly.
And that's our charge, man. I think as we rapping, I think that's the message, man. You know what I'm saying? Let's make the best of it.
Right, and Steve got the best. And Brian, you see how you see upside down. You see it in your industry, man. You're in the airlines industry as well. 95% profits are down in the airline industry right now. So you're talking about business upside down. That's a perfect example right there, Steve.
Right. We only upside down. Yeah, they're letting people go. Some people took early out. Some people taking leave of absence to do other things. Planning to sit in a couple of days. You know what I'm saying? I went to the terminal. I had to go just early this morning to my credit union and put a little money in, pay a couple of bills, and the terminal used to be full and it's very empty. It's like just like
crazy.
Like you drop a pin, you can hear it.
That's SFO.
Yeah.
Oakland. At
Well,
SFO.
yeah.
Wow.
But nationwide, though, I mean, and they shut down international. Like a couple of coworkers want to go overseas, and
That's a wrap.
they paid for their tickets, but they didn't get refunds, but they got vouchers for a year. So hopefully things come back up. You know what I'm saying? So,
they gave him that good voucher. We can't give you no refund right now.
yeah.
No cash. Give you some credit.
we ain't got it like that. We ain't got it right now. Come back.
Which is cold. They bought full fare tickets, but this pandemic, thing,
What can you do? What can you do?
Yeah, exactly. Shut it down. I mean, I kind of had the feeling that the vibes was the economy was gonna, go down because every 7 to 10 years this happens.
Yep. You're right.
This virus thing, man, just got this thing just
something else though, huh?
But it's not the virus though. That's what's crazy. It's only been 6 weeks. That means people are cash ain't right and you're struggling after 6 weeks.
Crazy.
Right? We only been in this for 6 weeks, B. That means major corporations, individuals, nobody has cash in their pocket. And everybody said cash is king. And nobody got cash. You told me a major corporation got six weeks worth of cash? Man, we playing out here, bro.
Well, that's crazy that you say that because the whole system is kind of based on, we're able to keep it going with the income that rolls in. So people are, you're able to, you finance it with debt, you finance it with this and that. Now that method of doing things is being exposed. You know what I'm saying? That we have to build reserves. And it's like in our society, that's just the way it has been for so long. It's not just 10, 20 years. It's been like this for a while. And we're being exposed. Like, how you going to be $1 billion corporation, but you can't operate for 6 weeks? But it's because you have your expenses are high. You know what I mean? And you're pushing and a lot of times you invest in your company because you gotta, especially public companies, they gotta grow. So you can't stay stagnant. You gotta grow. You gotta grow. So you gotta spend. And then look where we at. You know what I'm saying? So we got to do things more sustainably going forward, man. So
stock buybacks like crazy. Been happening where they just buy their own stocks instead of developing the business. It's crazy, man.
Yeah, it is. So I mean, I think that Jason, what do you think as we wrap, man? What do you think is investment wise? I know we always talk insurance. What is if you're someone who has multiple mortgages as an investor, what's some of the important insurance that they need to have? Because I think insurance, a lot of people are underinsured. From what I can see in terms of when calamity hits, what are some of the key insurances that people should be thinking about, as they going forward and putting their business together?
Yeah. Let's talk about insurance investment. So I think right now you always want to make sure your health insurance is right. If you get sick, you messed up. Saying about that, you make sure you have a good amount of disability, cover 60% of your income. After that, you make sure you have life insurance, should be 10 times your income or cover all your debt. And then what I'm telling people is get yourself lean, get your personal finances, your business finances lean, cut all the fat that you can. Figure out how to add additional cash flow if you can. Figure out that hustle and be on survival mode and figure out that you're going to be survival mode for the 6 months that you ain't going to be having the quality of life that you're used to. So figure out how to survive the next 6 months. And then figure out how to take advantage of this in the next 9 to 18 months. Figure out the life that you want and then figure out what you have to do to pursue it at that point. That's what I'm telling everybody. Cash is king. Don't be spending that $1,200 stimulus check. You get it. Stack that money if you don't have your reserves. Don't even think about stocks if you got no cash right now because you might get laid off in July. Because what people are forgetting is states are about to do furloughs in a second. Actually, LA's already doing it. Oakland got an $80 million shortfall.
Right.
$80 million in Oakland. So you're going to see layoffs. So if you think you got a government secure job, they ain't going to be there no more. Make sure you got bread for the next 3 months. Right? Load up that refrigerator. Pay that phone bill to get your hustle. And dial for dollars, right? So that's what I try to tell people. But then let's picture this. How do you want your lifestyle to be in 12 to 18 months? Where do you want to live? You want to live in Oakland Hills? Boom. What does it take to get there? All right, let's put those action steps into play. Figure out what's the steps to get there to that spot. Or you want to have a business? All right, what you got to do? Let's do that business plan right now. Let's go to the SBA. Let's go to the SBC. Put that business plan together. So that's what people got to do.
That's it.
Buy bullets. If you bullets, books, food, and stack bread, man. That's what I tell everybody, man. I get that paycheck protection. Oh, that's cool. That's stack money. Boom, I want to stack more bread. I'm
Stack it up.
The whole thing. We ain't tripping. Train ain't stopping.
Yeah,
That,
without a doubt. I mean, the
that's
thing
it.
is, a lot of these stores, long lines, get into it at the time. You got to get what you need to get in and get out. Costco, Safeway, Lucky, a lot of places, and even like I need to get some stuff because my partner does some um, carpentry work and building stuff like. And he wanted to get some stuff at Home Depot. Them lines is long. You should be able to go to Home Depot,
They
get what you
long.
want, and get out.
They
We had to go
long.
early. He said even then, early even when they open, I'm sure it's gonna be a long line in.
It's long, man. Hey,
Hey, I do delivery for Home Depot now, and I don't even go in there. Give it to me a couple of days, man. I need that bad.
man, it's ugly. Hey, you mentioned you was talking about stacking it. Well, I did. I got a backyard, right? And I didn't start. We compost. We finna start growing potatoes and greens. We going back to we just like, hey man, because we went to the store. I couldn't get spinach for like 2 weeks. I eat spinach like every day, every other day. So I'm like, you know what? I got land in my backyard. I'm like, we finna, man.
That's what I'm leaning towards to learn how to to grow food and
Hey,
stuff like that. Cause the stuff in the foods, man, it's why you gotta go to look at this stuff and look at the products. A lot of people look see what's in there. You got stuff that you don't understand. People still be eating it. But you got some folks that understand that they
right.
will put it in their body. You just triple like how example like Russell Simmons in his younger years, he's wild and all that, and when he go on that lifestyle change, he reverses versus age. I mean, he looked like a young dude.
Yeah.
Now, I mean, got that yoga and he
Yeah.
cleaned himself up from drugs and stuff like that. So it can happen. We just, health. I mean, I want my money to be right, but I want my health first, though.
That's
Spirituality,
important.
health, and wealth, and then finances. All in that, in that
In that
sync.
order.
In that order. Correct.
In that order. You said it right, man. Well, we keep God first. That's why I look at it.
Right.
God first, and then everything else.
Almighty Creator, exactly.
Yeah, man.
You have some
So
folks that there's a book called The Millionaire Next Door when they talk about the average millionaire. Have a Toyota, Honda, something like that. Then you have some folks from the hood. We BMW, Mercedes, that, and
yeah, and we ain't got no assets, and we ain't got nothing to show for it, man. And not even show, but real tangible value. So I think that's, man, as we break, man, I think that's the biggest thing that we got to work on building is value. You know what I mean?
Right.
Whether it's in your business, if you got laid off and you're trying to go get another job, you need to be more valuable than the next cat. You know what I mean? If you're going to start a business, whatever, you got to figure out what your value to them. If you have a business, you got to increase your value to the marketplace. You know what I mean? It's value right now. What is real, tangible value? So let's go make that rock, man. Let's make it happen, man. Yeah. So, well, thanks, man, for having me on, Jason, man. I appreciate it, man. And if anybody out there wants more, real estate content, definitely, go to my YouTube station, Infinity Investments. We have a monthly webinar that we do. It used to be a seminar. We're doing webinars now. We're putting out a lot of content. Soak up the content. Get Jason's content. As much content you can get out there that's positive and productive. Soak it up. Go after it. You know what I mean? The time is now. Don't just get to watching whatever on TV and kicking back. Like Jay said, it's time to be on stack mode and what you say, survival mode. With your money, you got to be on like survival mode with it. You know what I'm saying? It's not time to splurge at all. You know what I mean?
Not at all. Even good times. Some folks do it, but that's not a good idea. And you mentioned Paul Player struggling. I know Latrell Sprewell. I heard, back in the day he had cars and them rims and all that. I heard he's struggling right now.
Well, yeah. And the thing about it is, and you don't accumulate assets, you don't build the value in that. You just get in money. At some point, that stops, which is why you got to look at your investment, stacking up your assets that's going to pay you over time. So that's what we got to do.
And use those assets to buy all your toys you want.
There you go.
And that's what I think you should be the play.
That's it, man. So. All right, man. All right, bro. I appreciate it, man. Thank you, bro. Let's keep this going, man.
Yeah, when is the replay going to be available?
I should have it up by tomorrow. I'm about to upload it since we're done. And have my guy just make the titles and all that, and I send it both to both you guys.
Okay.
All good, bro. Thank y'all, man.
Y'all have a good night.
All right, you too. Everybody listening, peace, blessings, stay safe, stay healthy. Let's go get it.
Yes, right. All right. Good night.